Hello and welcome into the KE Report. I'm your host, Chad Markwitz, and today we're getting an update from Robert Sinn, also known as Goldfinger on CEO.ca and CeoTechnican on X. He's the publisher of Goldfinger Capital on YouTube and on Substack, so definitely check out the links below this interview. It'll take you over to see some of Robert's work in his various channels. Robert, always great having you on the show to get an update on how you're looking at the markets from a macro sense, from a micro sense, looking at what's going on that's driving the commodity sector. And of course, we're going to talk about gold and copper, the two metals of choice that you look for in your portfolios, especially when it relates to the resource sector. I know you follow other sectors as well, but I want to start things off just with the sentiment shift that we've seen since you and I actually saw each other in person last, which was in Fort Lauderdale, Florida. We're at a convention, the Commodities Global Expo, and that was, if you recall, when silver was ripping up to 35, gold going to 2,800, people glad-handing, feeling good, patting themselves on the back for how good that they just knew it. Look how smart we are. We knew it was going to happen. Only for that to be really a short-term or an immediate top. And since then, kind of a brutal pullback towards the end of the year. What do you make of the sentiment now that things have pulled back from those highs and corrected some in the last couple months?
Yeah, Shad, thanks for having me on the K Report. It's always a pleasure. Yeah, what a difference 6 weeks makes. It did feel pretty good there at the end of October there at the Four Seasons Fort Lauderdale. Definitely memorable. And yeah, silver was $35 for a fleeting moment that week, literally for 2 days. And that was the top. Yeah. So look, for any veterans in the precious metals space, junior mining space, this is nothing new. We know to expect these swings in sentiment. Sentiment can swing on a dime, and within a few weeks you could go from extremely oversold and very negative sentiment to overbought and frothy sentiment, and vice versa. You can go from overbought and parabolic to everybody saying, uh-oh, that was the top. We got to get out, dump everything. And that's kind of what we've seen since October. So that downdraft that started before the election in the U.S. and then accelerated after the election outcome. And, we could all try to make a narrative, oh, Trump is bullish for the dollar, or tariffs are bullish for the dollar, and, he's going to have this Doge and we're going to have austerity on the fiscal side. I mean, there's lots of narratives that we can make up that could be construed as negative for precious metals. But the reality is, precious metals were already turning lower prior to the election when the outcome was still unclear, and they just continued lower. And now it's interesting because, if you look at silver, $30 is a really big support level for silver. I think $25.75 is a really big support level for gold. So we've bounced off of those levels. We've started to gather ourselves and try to make a little move up the last week or so, but the miners are pretty lackluster, especially the juniors. So if we want to, drill down on the TSX Venture juniors, volumes are trailing off, and we are really in the midst of tax loss season here in the junior mining sector. And that's something that everybody knows happens in November and extends, towards the final weeks of the year until everybody gets their selling done around mid-month, and then we get a little rebound, or sometimes a big rebound in the final 2 weeks of the year. So we'll see if that happens again this year. But right now, it feels like we are really in the midst of the doldrums of tax loss season. Volumes are really trickling down, and I just don't see much going on all of a sudden. It feels like a ghost town out there. It's very interesting to see this shift, Shad, that we've had in the last 5 to 6 weeks.
Yeah, it's really interesting how quickly things change. And like we always say, Robert, sentiment follows price only every time. And so we've seen the sentiment sour so quickly. But the reality is, overall, the metals have had a pretty good year. When you look at what gold has done this year, it's astounding. It's all-time highs. When you look at what silver has done, it's impressive in the sense that it finally broke back above 30, got above that 32.50 briefly. But it's been in the 30s. Neither price is a bad price if you're a producer of the metals, gold or silver. Mm-hmm. Copper has had a pretty good year. Copper has been in the 4s. It's not like it's in the 2s or the 3s or even the 1s like it has been in the past. So a lot of people, when they look at the metals, are confounded that their junior mining stocks haven't done better. And we do seem to have a Groundhog Day effect in the sector where every year we have some of these seasonal patterns where we do have tax loss selling season. Now, some people thought because the metals did better and the mining stocks did a little better this year, maybe tax loss season wouldn't be so bad. But here it is once again. And every year, I think we talk about your article. Here comes the tax loss selling silly season. So how silly is it this year, Robert? What stocks do you have on your radar? What are you looking at for this tax loss season that could be an opportunity in disguise as we roll into Q1?
Yeah, so prior to getting into the tax loss list, I want to touch upon one point you made. So this has been a good year for gold and silver. Gold is up more than 30% in 2024. Silver's up almost 40% in 2024. So why the hell is everybody so depressed and negative and pessimistic when we've had great years in both metals? And even copper basically kind of flat for the year. Now, yeah, it was up at one point, it was up over 30%, but that gave back a lot of those gains, and we're just kind of treading water around 4 to 425, but that's still not a bad copper price. So why is everybody so damn depressed? It's very interesting to overlay investor negativity on the mining sector with actually what is happening. And look, the mining sector doesn't do itself any favors. Companies like Newmont, the biggest gold miner in the world, the one that's in the S&P 500, had a really bad quarter in October, very disappointing. That stock is flat on its ass, but it's interesting to think about Newmont at $41 a share against the gold price. This quarter in Q4 is going to be a record average gold selling price for Newmont. And this is their big quarter. Q4 is their big quarter where they're probably going to sell 2 million ounces gold equivalent this quarter. So Newmont's revenue for this quarter, knock on wood, I'm not their CFO, so I don't know exactly what the numbers are going to be, but they stand to be pretty good numbers coming out next month. We'll have to see, but the stock market doesn't care. The market is disappointed by the fact that costs went up again last quarter, and until, Newmont proves it can have more discipline on the cost side and generate bigger margins, and people seem to be pretty negative on it. But it is interesting, though, just to overlay what's actually happening. A lot of record quarters for gold miners back in October. Profitability is very high, but negativity is very high. So either gold is just going to tank, in the next couple months, or this has got to be a tremendous opportunity again here. And I know we've said that before, but it's no accident we're having this conversation now, because I really do think this is a great opportunity to put some capital to work.
Robert, you just made a great point. The Newmont correction is really what started the whole sector correction because it's such a heavy weighting in GDX. Mm-hmm. And so as GDX goes, so does the sector. So when Newmont disappointed on those results, that really kind of dinged the top, and Barrick didn't blow it out of the water either. But if you contrast that with some companies I know you also follow, think about Kinross's chart. Look at the chart for IAMGold. Look at the chart for Westgold. I'm talking about over the last year or two, or even just this year. Look at the chart of Alamos Gold. Look at the chart of Agnico Eagle. There are a lot of gold companies just jamming out the cash flow and doing a great job with fat margins that are doing a fantastic job. There's a lot of mid-tiers, too many to name, that are also having a fantastic year. So is it possible that because of the weakness in Newmont, the big boy on the block, and even Barrick, one of the most followed companies, being so heavily weighted in GDX, that it actually skews sentiment even in a weirder way, because not all companies have the chart that Newmont does?
I think you're right. I think that's a very valid point. And as dumb as it is, most money managers in the U.S. at least just buy and sell Newmont or the GDX. They don't really dig down into the sector. Like, yeah, if they buy the exchange traded fund, they own Kinross, sort of indirectly, but they don't really follow the company, right? They just look at Newmont. And so when Newmont disappoints, and it was a pretty big miss, and there was some optimism built into that October quarter, and they just dropped the ball again, and so I think that just exudes more negativity, for the gold mining sector. So the sector has to right itself here and turn the ship around here into 2025. But with these average selling prices that they're managing to achieve in Q3 and Q4 of this year and potentially into 2025, revenues are going to be extraordinary across this space. And not every company is Newmont, this bloated, massive, multinational company. A lot of companies like Kinross are a lot leaner, and they could generate some really big profit margins. So hopefully that will generate some tailwinds instead of headwinds that the sector has faced for the last several years. And then going back to the juniors, so the tax loss, silly season list, I do this every year. I've done it since 2017. It's just sort of a fun exercise that I like to do. It makes me turn my brain on, dig into more companies than I normally delve into, try to get some new ideas, try to think outside the box. Like, yeah, I see the chart. The stock is down from $10 to $250, and everybody's been selling it, and obviously people are very negative if a stock is down 75%, but maybe there's an opportunity here, right? So sort of just thinking outside the box and trying to find some diamonds in the rough. And so that's what I do every year at the end of November. I sort of dig into 30 or 40 different stocks, and then I narrow it down to a list of 6. And really, the idea behind it is there's a lot of tax-motivated selling that happens in the junior mining space in the fourth quarter of every year. And it's just like we're getting into October, November, people start tax planning. They start going through their portfolios and like, okay, I have gains here. I'm going to have to pay tax, a capital gains tax on this and this and this. How can I lower my tax exposure, make my tax bill a little less come year end? And so they start to just sell some of their biggest losers because they want to lock in the biggest loss possible to offset gains. And so that generates a pretty large amount of selling in the final months of the year. And some of the stocks that are already really beaten down, they get even more beaten down. So a stock might be down 40% at the beginning of October. By the end of November, it might be down 60% just because of all the tax loss selling that has come in. And it's a negative feedback loop, right? Like more selling, lower share prices, makes sentiment even worse. People start posting, negative things about the company that might not even be true just because the stock keeps going down. And then more people sell, and then more people sell it. It just becomes kind of absurd. And so by this time of the year, right, the final few weeks of the year, you get some real bargain basement opportunities in the junior mining sector. So it's an opportunity for people who have dry powder and are able to look past the last few months and what has happened, in 2024 that has generated a bad year for some of these stocks and, look to the future, maybe book a call with the CEO, dig through the presentation, go through the SEDAR filings, check out the company's balance sheet and financials, project portfolio, et cetera, and maybe you'll find some really good diamonds in the rough. So I came up with 6, and I'll just throw one out there for the sake of this conversation. Not going to go into all 6. It would take us a couple hours. But Barksdale, BRO on the TSX Venture. So this is an interesting one. They're Southern Arizona, 15 cents a share, 20 million market cap. 2024 performance is minus 62%. So just short summary of Barksdale. They're drilling a project that's adjacent to South 32's big Taylor deposit in Southern Arizona. So this is a multi-billion-dollar mine that South 32 is building right now. They're building it, and the mine is likely to be open by the end of 2027. They're investing a lot of money into this thing. High-grade silver, lead, zinc deposit, over 150 million tons total. So that makes Barksdale very interesting because their property footprint is all around South 32 here in Southern Arizona. So it's a pretty logical tie-in to South 32's assets. But the last couple of years, Barksdale, they got their drill permit in 2023. They started drilling. The first phase of drilling did not go well. Just to put it nicely, summarize it, it didn't go well. A lot of money was spent. Holes were drilled. They didn't necessarily hit their targets. company went through an overhaul in the last year, new VP of exploration, new technical advisor, yada, yada, yada. So a new game plan, and they're drilling now. They are drilling their phase 2 program right now. They've punched a couple holes in so far. This is deeper drilling, but when you go through the presentation and the maps and the targets, this is like, as far as drill targets go, this is like in the junior mining sector, this is like a 9.5 out of 10, right? It's like you've got a big deposit over to the east, you've got a porphyry to the west, what's in the middle? Probably more of the same, right? It's not that complicated. But they have to prove it with the drill bit, and that's what they're doing right now. But because of the mishaps of the phase 1 drill program, the disappointment that generated, the stock dropped from 75 cents to 15 cents. So that is the opportunity here, is to be able to buy when expectations are much lower, the valuation is much lower, investor sentiment is very negative on the company, and now the company actually has an opportunity to jump over the bar because it's been lowered so much.
Well, I think that's a great example. And of course, the Taylor, and now they found the Peak deposit next door. Very impressive why South 32 took over Arizona mining in the first place. And it is a world-class tier 1 deposit. If Barksdale has anything close to that, which they likely do, and you see not just the CRD system with the lead, zinc, silver, but also some copper silver there because of that nearby porphyry. So you got to have 4 really critical base metals, battery metals in there. It's definitely one to look at. Let me ask you this. From a psychology standpoint, I know that you like to look at how people trade and what goes on between the ears when you're trying to push the buy and sell button. Why is it so difficult for people to buy low if there's not a lights out moment for one of these companies? The fundamentals are all still there. As you say, they've changed up their technical team. The targets are there. The land is prospective. They're starting to get sniffs of what they want. Why is it so hard for people to say, hey, I liked it at 75 cents. Why don't you love it at 15 cents then? What is the issue we have as investors, or how could you maybe speak to people having that issue during tax loss season for any stock that they think is quality, that it's, still got the fundamentals there? Why is it so hard to buy low?
That's a great question, Chad. I mean, number one, the junior mining sector is a sentiment-based, speculative sector because it is not as easy to anchor value as it is in other areas of the stock market. Like, if I look at Walmart, I can look at their cash flow statement, I can look at their profitability, I can look at their growth rates, I can look at their profit margins, and I can come up with a model and a valuation for Walmart. Barksdale Resources, I can't do any of that stuff. They don't have an income statement really. They don't have cash flow, right? And so the value is very speculative in nature. What are these mining claims worth in southern Arizona? What is in the ground? How much copper is in the ground? What is the average grade of the copper ore body? Do they have high grade silver like South 32 does, right? How much do they have, right? All these questions, and to answer the questions takes money and time, and that's the real problem, right? That's the challenge that all these companies have to overcome. So from an investor standpoint, they look at the phase 1 drill program. They look at the results. They look at how much it cost. They look at the turnover in the company, in the management, the new VP of X and technical advisor coming on board, right? And they're like, oh, now it's a show me story, right? Because it was one thing before. They were telling me this was going to happen, then it didn't happen, and you get the major disappointment. So for investors, it's tough for them psychologically to have confidence when there has been a quote unquote failure in the recent past, right? And that's the psychological leap that most people can't get over. And also just human nature. We like to be part of a herd. We want to be part of a crowd. People go to football games and spend hundreds of dollars to watch their favorite team and sit among 70,000 people like them who like the same team. We like doing stuff like that. We wouldn't go to the game if it was just us and 2 other people, right? It just wouldn't be as interesting. People like to be part of a popular cheery crowd all saying the same things and confirming their bias. That's why so many investors, regardless of whether it's junior mining or crypto or whatever, they love to buy high price stocks that have had big rallies or way up, and everybody's talking about them. They're talking about it on CNBC. People love that, even though their better self, their higher self probably knows, hey, I'm going to lose money buying this. This is a really dumb idea because I'm buying it really high, right? But that's just how people are. That's human nature. So it's very hard for most human beings to go against the grain and be a contrarian and say, I'm going to be the guy who puts in a bid on this junior mining stock that's down 70% at a low price and do something that's not popular. But maybe in 3 months it'll be popular again after the company puts out a great drill hole or a couple of great holes, right? And that's just how it is, But then also sometimes the drill holes might not come and it will just keep dropping. You don't know.
Well, to that very point, people do have the herd behavior, the madness of crowds, as the famous book says. There is that desire to pile in, that tribal nature of human beings. Mm-hmm. But to that point, do you think that what's happened in cryptocurrencies over the last couple of months, and even post-election, that even the slam higher to 100,000 in Bitcoin, the general markets, look at the S&P, look at the NASDAQ, just ripping higher and higher. Is there a point where we need some of those investors to come over to this sector for those to correct? Or do we just want to see an everything melt up and just see that same kind of herd mentality pile into this sector, regardless of if those are going up or not? Do we need a corrective move in those markets, I guess is what I'm asking.
I don't think we need a corrective move necessarily. I think what we really need is we need Trump to say, U.S. minerals. We are emphasizing U.S. minerals at mining. We're going to vertically integrate the supply chain. We're not going to count on Indonesia, China, Russia, blah, blah, blah. We have the minerals right here in the great U.S. of A. And we're going to permit some freaking mines, right? And then money, there's a lot of money out there, Shad. There's more than $6 trillion in money market funds. It's more than $6 trillion in money market funds. If 1% of that went into mining, I'm not even saying junior mining, went into mining, we would have a rally of our lifetimes in this sector, right? So we just need government acknowledgement and support that we need to build some mines in this country. We have the resources. We have Resolution in Arizona. We have Pebble in Alaska. We have Trilogy. We have stuff in Minnesota. We've got the metals. We just need to get the political will to build these things and generate the jobs. We'll generate tens of thousands of high-paying jobs for Americans if we can activate the mining industry in this country. And I believe that Trump can do that. And that will create some greed. People will want to participate in this all of a sudden. And money will flow into the sector. But it doesn't have to leave, NVIDIA or Walmart. It can just, there's so much money out there. $6 trillion in money market funds is all you need to know.
Well, there you go. We've got the metals. We just need the permits. We just need the political will. And we've seen some of that with critical minerals, which has been constructed the last couple of years. But we need to see real action, something taken. And the same thing for our neighbors in the north in Canada. We need to see less posturing and more, let's get it done, more action. So yeah, I wouldn't be doing my job if I didn't ask you for a gold stock tip, though. Not necessarily a tip. I hate using that word. But just something you're looking at in the tax loss silly season, or a good value, something in the precious metal sector that has your attention.
Do you want a junior or do you want a producer?
Let's go junior to keep everybody happy. That way we can all put on our speculative hats.
Okay. I've had a soft spot for, Endurance Gold for the last few years. The symbol is EDG on the TSX Venture. I'm a shareholder. They're also a sponsor of Goldfinger Capital. Robert Boyd is the CEO. Very smart CEO. Very savvy veteran. If you have any interest in Endurance Gold, I suggest sending him an email and setting up a Zoom call so you can hear the full story from him. He knows it a lot better than I do. He's the CEO. But I've been a shareholder for the few years. I think it didn't make my tax loss list just because there's just so many stocks out there. I couldn't pick them all. But it would be an example of a tax loss opportunity for sure. I think it's at 14 cents a share. This was a stock that in 2022 traded above 50 cents for, a couple of weeks. Look at their drill intercepts, the body of work that they put together the last few years. This could be a pretty big gold deposit there in BC. I think they have assays pending for another dozen holes from the 2024 program, so we'll probably continue to see those assays start to come out over the next couple of months, and then they'll be back up there with a drill program again in 2025, probably in the spring. But yeah, Endurance Gold is a good one in my opinion.
All right. Well, let's end on a high note there. That's a great idea to do a little more due diligence. And again, if people do like a company they're looking at, I definitely back what Robert is saying about calling the management team, engage with them, and at least engage with the investor relations team and get a dialogue going and do a deeper dive in the company so that you have the confidence and the staying power to make it through pullbacks and hold on for the positive catalyst that the company has laid out in the future. And appreciate getting all your ideas here on how you're looking at the markets, what you think could move the metals in a year that was actually, as we said, a pretty good year for the metals. Let's hope we see a Santa Claus rally here the last couple of weeks of the year. We'll connect again in the new year and get your outlook for 2025. But until then, Robert, always great having you on the KE Report. And if people like getting Robert's thoughts, definitely click on the links below this interview. It takes you over to a couple of the different channels and platforms that Robert opines on and shares his analysis and shares the companies that are on his radar. And as always, looking forward to our next conversation.
Chad, thank you so much for your time. Appreciate it.